Okay, so let's make a full breakdown of the situation that we currently have for GBPUSD. Now, starting here from the monthly, what we can see is that at the moment the market is testing a very strong level of monthly demand and support. In fact, from here, all this move to the upside was created again. Here, the market tested its zone and rejected it to the upside. At the moment, we're testing the same zone from which there is definitely the possibility for a potential rejection higher. Dropping down on the weekly, we can see how, from a weekly perspective, the market has now printed this M pattern. And in general, after the creation of an M pattern, what we could expect is for the market to create a potential rejection to the upside for the completion of the pattern at the neckline, which is the previous support turned resistance. Now, dropping down on the daily, what do we see? From a daily perspective, the market created this move to the downside and then started creating this horizontal accumulation phase. In general, after horizontal accumulation, you would expect an inversion of the trend, which in this case would indicate a potential rejection to the upside, which at that point would also complete this weekly M pattern at the neckline. So, what it would appear is that from here we could expect some bullish price action. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the pound, we can see how with the last reports, net positions have been increasing. We went from minus 56k to now minus 27k net positions, with longs getting increased from 29.3k all the way up to 58.7k longs. Shorts more or less remaining unchanged, and that is why net positions are getting increased with 14k longs added with the last report alone. This overall is contributing to the strength of the pound, which could definitely provide this potential rejection to the upside and the completion of the weekly M pattern that we were previously identifying. So, how we could be approaching this potential rejection to the upside. As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection to the upside for the completion of the M pattern on the weekly at the neckline. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.